Hello, everybody. Welcome to this week's GoNoGo show. Nope, I'm not having technical difficulties. Tyler is not missing. He's actually not here. He's traveling this week. So you're left with yours truly. I'll be running the charts myself solo, and we'll try to just walk through what we found interesting this week and what we were looking at as the week began and see how things have progressed. So let's start, as we so often do, with looking at a asset map. This is a go-no-go asset map with the go-no-go trend applied to the major asset classes. And what you can see is it's similar to how it's been for the past several weeks. We're in a relatively risk-on environment, but we are being cautious. We are seeing some things that will make us a little bit more careful. You can see that in the top panel here, the equities have returned to a go trend, but they flirted with those amber go fish bars during the beginning of this week, but have returned to paint paler aqua bars now as the week comes to its end. Treasury bond prices continue to be in a strong no-go. And remember, we always try to mention that bond prices move inversely to yields. So these are a downtrend, a no-go trend in Treasury bond prices, which has really been in place now since the beginning of the year. The third panel here shows commodities. Commodities still a go trend, hanging on to the go trend, but painting paler, weaker aqua go bars. And the dollar, we talked about this in this week's research, but the dollar showing continued strength, showing strong blue go bars this week. And Bitcoin continues to chop us around as the world's largest cryptocurrency rolls over and paints a couple of no-go bars. So let's move on, and we'll talk about rates. This has been something that everybody's been talking about now for some time. We are for sure in a rising rate environment, but we've had a lot of discussion lately regarding how aggressive the Fed is going to be. Will they raise rates even faster than they'd first suggested? And that's sort of been on everybody's minds, and how a rising rate environment will affect the markets. How would it affect stocks? How would it affect commodities? And all of these questions that we would need to try to answer, given that we're in this fast rising rate environment. And so this is the daily chart, the daily chart of the 10-year US Treasury yields. And you can see that the trend is strong. The trend is in place. We got a recent go trend continuation icon here, which tells us that the oscillator bounced or found support at the zero line. And when that happens, we can say that the momentum has returned in the direction of the go trend. That's why we get that go trend continuation icon here. And earlier in the week, when we put out our research, we were talking about how we may see some resistance at these levels. Perhaps we're overbought and we may struggle to go much higher in the short term. And indeed, the first couple of days of the week, we fell away just a little bit. But today, up over 4% as we record this, lunchtime on Thursday, rates really moving and look strong on the daily chart. Now, what I wanted to do and what we talked about on Monday, we tried to back this chart out for as long as we could, using a quarterly chart, quarterly prices. Look at this long-term downtrend in rates. So we just want to keep in mind that even though this very fast rally in rates that we see on the daily chart is really just this little movement here off these ultimate lows. And if you think about it in the context of historical rates, we can see that we're still at very low levels. These are historically low levels. If you wanted to refinance or buy another house, maybe now is the time, because what if we break above this resistance, right? So this is what we're looking at, excuse me, on the really long-term chart. We can see that this movement in rates, which has really spooked investors, has pushed us up against this downward sloping trend line that's been in place now since the mid to late 80s. Now, this time around, there is a bit of a cause to think that perhaps we may go higher still. You can see that the last couple of bars on this quarterly chart have been amber go fish bars. We've come out of the no-go colors. And then this current bar, we're seeing the oscillator peak into positive territory. So we're going to be watching this really closely. Of course, it'll take a few quarters, 6 months or so, to know whether or not we've broken above this downward sloping trend line. But if we do get above this, then there really isn't too much downward pressure on rates, and who knows how much higher rates could go. So if we take that back to the daily chart, is there room for rates to go higher? It looks overextended here on the daily, but if we were to get a little bit higher above, this is the line that was on the chart previously, then there's certainly an argument to be made that rates could go, much higher still, especially given the inflationary pressures that we're seeing as well at the moment. And so we're going to keep an eye on rates. Now, if we move on from Treasury rate, look at the dollar has been very, very strong. And let's look at that on a weekly basis first. The dollar really now for just about a year, as we come into the summer months here, has been in this really good, strong go trend, making higher highs and higher lows. And we can see that we've had several opportunities, several go trend continuation icons that have indicated to us that the trend is going to continue. And we get that, of course, when the oscillator bounced off the zero line. So you can see how well supported this trend has been as the oscillator continues to find support at the zero line. And if we take that down a time frame and look at it on a daily chart, one of the things that we were looking at in our weekly note that went out Monday was this flag pattern. Now, if you can watch me sort of follow this counter trend correction against the direction of this new go trend, you can see that we had that counter trend correction arrow here after that strong rally in the dollar. And then as this consolidation sideways or slightly against the go trend pushed the oscillator to the zero line, we saw a squeeze build. And then ultimately we saw the oscillator break back into positive territory and gave us another go trend continuation icon. So we've now seen that break above this consolidation resistance and price moving higher still. So the dollar still showing really good strength as we see it sort of come towards the end of the week. Now, if we think about that, with a trend in the dollar being a go, then the companies that sell goods and services to America are likely to see relatively strong profits as a result of favorable exchange rates. So in many ways, a strong dollar has the potential to be a tailwind for companies outside the US that do business with the US. So one of the charts we looked at in our weekly note this week was the chart Telefonica. So if we pull up Telefonica, we can see that this has had a really nice run of late. And this is where we were looking as the week began. So if we think about Monday was right here, this was the resistance that we were noting, that we were in a strong go trend with an uninterrupted spell of blue go bars pushing us up against the resistance from prior highs that were in the middle of February. And since then, it's really moved higher, significantly higher, and higher again today. So perhaps that thesis of the dollar strength helping companies that do business from outside of the US may be helping move this one higher. Now, another area that we've talked about, a lot over the past several months is that of commodities and agriculture and that potential super cycle in the commodities markets. And, the dollar, of course, affects that as well, with so many commodities being priced in the dollar. And we've looked at agricultural commodities several times over the course of the last 6 months to a year. And so the chart that we're going to look at when we do that is the chart of DBA. This is a blended agriculture fund, and you just continue to see strength in this fund. Since the go trend was identified at the beginning of the year, prices have rallied, and every time the prices have fallen or cooled off and corrected against the trend, we've seen the oscillator find that support at zero, which is so important. When it does that, we know that the momentum is then coming back in the direction of the go trend. So whenever you can find a trend whenever you find a trend in place, the oscillator really allows you to stay with the trend, because every time it finds support in a go trend, we can say that the trend is likely to continue. Momentum is back on the side of the trend, in the direction of the trend. We were looking at this again. This was the beginning of the week, and we see this consolidation again as the oscillator now rides the zero line. Now, this has really been riding the zero line for over a month, with just this sort of little foray into positive territory. But generally speaking, the squeeze has built twice to its max. And we see this break of the squeeze again here at the beginning of the week, telling us that momentum is back in the direction of the go trend. That's what that green go trend continuation icon is telling us. So where do we go from looking at agricultural commodities? One of the ones that we highlighted this week, and one that's been on our radar, sorry, I should say, for a while, is wheat. Now, obviously, with all of the terrible events going on around the world and the war in Ukraine, the wheat futures have seen an incredible rally since the beginning of the year, especially in the month of February. And together, Russia and the Ukraine account for more than a quarter of the world's wheat production. So there's a lot of investors out there, analysts out there, that feel that the pressure on wheat prices to move higher is not going to abide anytime soon. And given that being the case, we can take a look at the charts that we put out on Monday, which is the charts of wheat. And the first one we'll look at on a daily basis. If I just pull up wheat here and the daily chart of wheat, we can see again what a run we saw in that month of February. Really strong, uninterrupted go bars. Now, that's always at some point going to become unsustainable, right? And so we see a counter trend correction arrow as the GoNoGo oscillator comes back into its sort of neutral territory, off its extremes, back below 5. And of course, you can see the volume here on that run in February when things really escalated in the Ukraine, the oscillator moving to this darker blue color, telling us that, yes, not only is price moving quickly, but we've got a lot of volume being traded. Now, after that really quick run, prices consolidated and came off those highs and came back a little bit. And volatility was reduced quite significantly. You can see the bars shrinking in size, and that caused the oscillator to fall to the zero line. And remember, we've talked about it a lot in this show already, but when the oscillator falls to zero, it's very important. And the reason it's important is because it's telling us that all the inputs to the oscillator, all of those momentum indicators, are in their neutral territory, meaning that there's little directional pull from a momentum standpoint, either bullish or bearish. And so the longer that the oscillator stays at zero, that tells us that there's shrunken volatility continuing. Now, it was interesting because as this grid of the GoNoGo squeeze built to its extremes, it eventually got broken slightly into negative territory, which we wouldn't expect if the go trend was to continue. But we noted this week in our note on Monday that it didn't get significantly into negative territory before quickly coming back to zero and staying at zero again. And now this time a smaller squeeze grew and the oscillator broke into positive territory on heavy volume. And that's caused a go trend continuation icon to appear under the price bar. So when we were looking at this on Monday, we were looking at how it was back at zero, and we'd watch to see if it went into positive territory this time or if it got rejected again and fell negative. Well, it went into positive territory. We see a go trend continuation icon, green circle under the price bar happening yesterday. And so we can look for wheat prices on a daily basis now to attack these prior highs and potentially make a new higher high as long as the oscillator remains supported by the zero line. Now, if we look at it on a weekly chart, we can see, what a what a clean sort of chart this has been. Now prices have moved higher. If we pull back the chart, really since this go trend was identified at 540 back in 2020, in about May, June of 2020. And you can see how prices have rallied consistently and quite steadily during that time. And each time find the oscillator finding support at zero as prices consolidated. And that's really the healthy trend that you're looking for. Now, here's that February where we saw prices really take off due to what was happening around the world. The oscillator busted out of a squeeze. We saw heavy volume, prices moved higher. Now, to me, we're looking at this sort of consolidation correction against the trend, looking like a small flag or a pennant on the weekly chart. And this last week's bar gave us another go trend continuation icon. So price, the oscillator, bouncing off the zero line, and then price moving higher again this week. So all things look to me technically set up for wheat to move higher on a weekly basis. It could break out of this pennant and move to new highs, and the daily chart looks strong as well. So nothing really to stop wheat from going higher. Obviously, we'll watch the oscillator as we always do to see if it can hold as support as the go trend continues and the go trend persists. But if it does, really nothing to give us any indication other than that go trend will continue. We saw it on the daily basis and the weekly as well. Obviously, the weekly chart looking good with that flag or pennant being broken this week. So that went out Monday, talking about that we were seeing that pattern, and we were asking whether or not the support at the zero line would cause that price to move higher, and it certainly has so far this week. So let's take a look at a company that might profit from that, given that the agricultural commodities are in a strong go trend, given that wheat is in a strong go trend. Let's look at Archer-Daniels-Midland, a strong producer of the agricultural commodities, including wheat. And you can see on the weekly chart, nothing but a strong go trend here. We've got a relatively recent consolidation that found support, broke out of the squeeze. Interestingly, here on a couple of amber go fish bars, the oscillator, though, finding support again as we re-entered the go trend, and really strong price movement ever since, with the oscillator staying elevated above these overbought levels on heavy volume. And if we look at that on a daily chart, what's to say? Really, it's just strong. It really does look like a strong chart. So talk about situations where you might be looking to buy the dip in a strong trend. This looks like a strong trend, and it's been a strong trend for a while. And a trend in place, the theory is likely to stay in place unless something fundamentally changes. But given the fact that we see pressure on wheat to move higher, with what's happening in the Russia-Ukraine conflict, there doesn't seem to be much to suggest that the trend is going to be over for companies such as Archer-Daniels-Midland. And so what we might do for something like this is you want to perhaps get into a trade, but on the daily, we're seeing very strong blue bars and price oscillator, relatively overbought. You might step down a time frame to try to find an entry that would make sense. So if you go down to, I'm just picking one here, the hourly chart, you can see that you've had several opportunities to take part in that, even though the daily looked overextended and the daily looked like there wasn't really an opportunity because we were already overbought on the oscillator and at new highs. Here's the hourly chart over the last couple of weeks, and even just a couple of days ago, just yesterday, we could have had a go trend continuation icon on the hourly chart, several of them a few days ago. So that's always multi-time frame analysis is really the way that you can have a market bias from a larger time frame and then step down that time frame to get better entries. And if you think about people working with portfolio managers, that's exactly what the traders might do. They get given an order, but they want to execute at a sensible price relative to something perhaps like the VWAP. And so you would step down the time frame to try to find sensible entry points. So that was what we went through this week in our flight path note. For the last couple of minutes here, I'm just going to pull up a couple of charts that everybody, of course, is talking about, just to sort of set the stage for the week ending tomorrow and what we're seeing perhaps going into next week. So the first one, we'll look at the S&P. The S&P has been really interesting. We're going to take it back to the daily chart, which is the one that so many of us are looking at. It's been really interesting because we were able to climb out of this no-go correction and get into a go trend, but we failed at these levels that have been historically tough for the S&P. Now, for the last couple of weeks, we've been saying, okay, strong rally, but perhaps a counter trend correction. And we were watching. We talked about this last week. We talked about it again in conversations throughout this week. But we were watching to see what would happen at the zero line. So as the week ended last week, the oscillator was at the zero line. So this go trend in place, oscillator at zero. We would want to see support there, which we didn't get. The GoNoGo trend fell into amber go fish bars, and the oscillator fell into negative territory. Now, it's tried to rally yesterday. Yesterday was a great day, and we saw a go trend come back for that one bar. But the oscillators, to me, there's not confirming that, and we're seeing the oscillator move lower today, more into negative territory as the trend indicator goes back to amber go fish bars. So we're going to be watching closely, but very much a struggle at the moment for the S&P to stay in that go trend. Oscillator already broken below zero, which we know should be support if the trend is healthy. So this is not healthy. We've seen some amber go fish bars creep back in. If we move any lower in price, we will probably see a return to the no-go colors that we saw over here. We really would need the oscillator to rally strongly back to zero. Then we would be seeing a new low, a higher low being put in if that was the case. But at the moment, it's a struggle for the S&P. And the other chart that I just wanted to leave you with is that of Bitcoin. Bitcoin has really been tough for so many reasons over the past few months since it fell into this range of trading down here once it really broke below these lows. And we've rolled over again now. So really nothing to stop Bitcoin going back to test these lows that you see here earlier in the chart. A new purple bar being painted today. And if we look at it on a weekly chart, we can see that having really risen and rallied strongly, we're now really sort of embroiled in a no-go. The oscillator is broken below zero, has come back to zero. This is very, very important. Should this oscillator get turned away here by the zero and find resistance here, then we'll see a new leg down in price. So we'll be really watching Bitcoin. We've got these massive support levels here on a long-term chart, this weekly chart. So we'll be watching closely. But that's it. Thank you very, very much for watching. I hope you enjoyed it. If you have any questions, of course, feel free to reach out to us via email. And thanks very much for your time. And next week, we hope to have Tyler back. So it'll be a bit more interesting. You won't have to listen to me do the whole thing on my own. But again, thanks for joining. Hope it was educational and useful. And we'll see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.